It's Monday once again. That means it's Setup Monday at Brave New Coin. Let's take a look at some charts. We've gone from looking decently okay with a nice sized bounce to breaking every last support I can see on any time frame, on any metric. Here's the massive pitchfork on BTC. And the idea of these is you pick 3 points, you get a rate of change. It gives you a projection, an idea of possibility, gives you diagonal support and resist levels. The more we bounce around within these zones, the more that these zones are recognized by price, the more confidence it gives me for the pitchfork as a whole in the future. So when I see us breaking above the midline, you can say it's safe to assume we're going to go for the top end of this pitchfork. When you see us confirming a breakdown below the midline, which is what we might do this week, that tells me, okay, maybe there's a decent chance we fish around to 20K within Q3, which historically has been not a great quarter anyway. Q3's mainly been down or negative, or break even or negative, because Q2 has always been so positive. So the fact that Q2 is negative maybe means Q3 is okay, maybe it means seasonality is pointless. We can throw that out the window. But it's hard for me to look at Q3 and not think we're going to be diving down here at some point. You know, ideally we get some good short entries here so that you can take some profit on the downside, because this looks bearish. We have a 5200 cross, which historically hasn't really done much. I think, you know, it's mixed. Some of the signals have been great. You know, this signal was basically the bottom. The difference is when we get a death cross after a 70% down move versus a death cross after a 90-day consolidation, 120-day consolidation, whatever it was, into a 60-day consolidation. For me, I can take that more seriously because this happened super slow. We had a mean reversion. We had a mean reversion plus attempt, and we couldn't get there. Sailor keeps buying. Can't see it on the chart, right? Like there's no significant bullish anything about the way this looks, specifically over the past 5 days, right? We've been selling off. You know, I don't want to go to cash when we're in range lows on Enzyme, but I had to because the downside here is significant. It is 50% or more, and I've been saying this for DeFi for quite some time, which is why more of that portfolio has been in cash. But you've got legacy people looking at two things, basically institutional money type people. They're looking at China stuff, Tether stuff, both of which is pointless or just needs to explode at this point. China may be gone for good after this next month. Tether FUD is always going to exist because of the nature of what it is. I don't see any big issues in the near term with Tether, but people are talking about Tether again. And then on the technicals, they're looking at this death cross and they're looking at this potential head and shoulders nonsense, right? I don't have volume on here. You can argue about the structure of this all you want, but you've got people like Peter Brandt and people like Michael Burry, the big short guy, talking about this. So if those two big legacy people or people who trade legacy on a regular basis are looking at this price structure in that way, it's safe to assume that many other people are looking at it in that way. And sort of a generous downside would be below 10K, you know? Maybe we see 10K BTC in Q3. Maybe we don't. But there isn't, you know, this isn't bullish no matter how you try to slice it. That's what I'm trying to say. This was the 8 hour I was watching. This is the really nice range we had established. We looked like we were ready to not only break the range, but break the pitchfork. But we immediately got sold down and just kept spiking lower and lower and lower. And that looks like we're just going to break this range. But it's hard to even take a short here because of how barty we've been, how volatile on these low time frames we've been, both to the upside or to the downside. You know, we tapped both sides of this range extremely quickly to try to accumulate. So maybe, you know, maybe if I'm smarter, I'm adding or opening shorts at the 200 tap. But when I'm looking at this, you know, this looked like white coffee and accumulation. It looked like we had canceled the descending triangle. All that's out the window now, right? And this is after Sailor bought, so there's really no hope anymore. Sailor's buy, I think, was somewhere in here, 36K, whatever that was. So you can't even tell that it was there. So now we're back in the pitchfork again, just like this big one, right? If we get denied up here, we return to the midline. All this stuff is the same over and over again. If we get denied here, we return to the midline. I've seen this for alts over and over and over again. It's just part of the pitchfork game. You know, this is one of the reasons why I even use these pitchforks. Does the market know that I added a purple wing because it exceeded it here and that it just barely didn't exceed it here? Like the market doesn't know that, right? So I don't know, maybe it's pareidolia, maybe TA is pointless, but I'm still going to use it. This is CME futures contracts. And if you've seen any of my videos ever, you probably know what this is about, but these are all the dates, the rollovers for futures. The reason it's important to pay attention to CME, even though it's cash settled, is because there's a ton of money in these contracts. This is institutional money. This is multi-million-dollar OI. This is 5 BTC per contract. So this isn't tiny retail stuff. Even though it is cash settled, it does and has dictated the directionality of the market for a long time. And for the most part, these yellow contracts have been a one-way street, even in 2018. Aside from Corona March, they've either been up or down. And so far, we've only really been down since that March 29th open. If we don't roll over positive at the end of the week and we do go lower, the expectation for me is we're bearish until the end of September, because that's just how it's been. And everything looks like it wants to retrace to its January open, basically. This is ETH OI is massive. This is another way to look at rollovers. This is Deribit. So basically what I'm trying to say is there's going to be a ton of volume sloshing around this week. This is the BTC. And you can say, like, notionally this isn't a lot, but it is. it always is. It's never not going to be. You can say this is smaller than XYZ time. This is 2 billion, it looks like. On BTC, this is 1 point something billion on ETH. And when the market liquidity is thin, volumes are low, stuff like this has a huge impact on what's going on with price action. Something else that isn't really getting enough coverage, I don't think, is this miner stuff going on in China. I don't care what China has to say. I don't care what miners are saying. I care about what I can actually see as a metric, and that is difficulty, right? If China says they're banning Bitcoin and they're banning miners and miners aren't doing anything, it's going to show up here. But this is the opposite. This says China's banning, miners are listening, they're going elsewhere, they have to leave, and you're seeing another negative difficulty adjustment, the third in a row since the end of May. That'll be really the biggest string of negatives since I think the end of 2018 or the beginning of 2018. Like it's hard for me to even find. Here we go. Basically November, December 2018, near the bottom of price at that time. But it's never bearish. You know, you can say hash rate follows price, price follows hash rate, whatever. It's just hard for sentiment to be bullish. When we're seeing this, it doesn't necessarily mean miners are selling. Yes, inflation is slightly lower because the block times are lower, blah, blah, blah. But at the end of the day, what we've seen is this is not a bullish situation. Flipping gears to ETH downside looks considerable along with all of the DeFi stuff. ETH's January open is somewhere around 800. By the time this gets to the midline of the pitchfork, maybe it's at 800. Again, a lot of people do not like this chart. They don't like pitchforks to begin with, but I keep looking at this and I can't find reasons why to not believe it if we keep breaking lows, right? We tried to consolidate here and ETH looked weaker than BTC did on low time frames, just couldn't hold anything. And ultimately you want on-chain liquidations to start happening again. You want this to happen quick. You do not want this to happen slowly because it inevitably goes lower. There's no massive signal, right, for the market to say, okay, this is the bottom. You know, it's just people waking up every day thinking, okay, this got to bounce, right? This has to bounce. This has to bounce. You don't want to see that. You want to see massive spikes. It's not going to spike to 600. It's probably going to spike to 1500 or something. I don't know. But over Q3, you know, again, I'm so bearish Q3 because of seasonality historically. Here's ETH-BTC, very clear M double top on this now. And I like anything below 0.05 as far as a potential buy the dip situation. Again, pitchfork, told you the top. Yearly pivots, told you the top. Haven't exceeded that. This midline is going to act like a magnet. If we break below that, then we're going to start diving into 0304 zone. DeFi looks ultra wrecked. It was painting a falling wedge. It went from an ascending triangle to an inverted Adam and Eve that began to break the range, broke the 200-day moving average. Now it's started to paint this falling wedge, which may continue throughout Q3, still on relatively little volume. And it just looks like it wants to puke lower. January open is still way down here at basically 2,500 for this index. Still haven't gotten our bear cross on the 50 and the 200 here. I mean, there's just nothing I can look to that looks bottomy on any of this stuff. And if you're just trading the range high to the range low to the downside, it gives you a target of 3,300. VPVR supports sub 26. I mean, the stuff that looked good, like Link looks like it's ready for, like it's over for Link if it breaks this. This is a multi-year pitchfork. This is the trend. It's already below the 200-day moving average. It's probably got a death cross soon as well on the daily. These are not bullish things. There's no bullishness here. Now, this is the maximum risk reward right now because upside is probably 100 from here. So a 5x. If we bounce, if we don't bounce, it's significantly lower. And the strength and ferocity that this has fallen has been impressive. Aave as well, kind of setting up for this head and shoulders type thing. I don't know. There was a bull div on this. But again, on the 3-day, it's breaking below this pitchfork, this range that it needed to hold doesn't look like it will. And the yearly open is somewhere around 92. Link's yearly open is 10-ish. So it's hard to be bullish on any of that stuff. One thing I think I'll mention as well is the year in TVL keeps increasing, or at least had been increasing pretty significantly. And this may just represent very little appetite for speculation and risk as people are shoving stablecoins or whatever else into yield farming stuff. And it's pretty much the only TVL that has been increasing other than Curve, which is mainly stablecoins. So that's going to increase relative to any other TVL that isn't stablecoins because there's lower volatility risk and or no volatility risk in that TVL. So we're looking, it's just hard to be bullish when we break supports over and over again and just can't even muster any bullishness over a few days' time. I'll mention the Enzyme ETH-BTC fund, DeFi portfolio. Like I said today, I had to sell. We had Curve, we had Link, and we had Aave and Melon in here. You just can't hold on to this stuff right now. Maybe you buy on the way down, but when we're already down basically 50% from break even, you can't continue to hold that stuff. The ETH-BTC fund is still in profit relative to where we started, but certainly a significant drawdown from the top. That top was around 167. It's at 120 now. I moved all of this into Aave USDC as well. And how this works is it's a non-custodial portfolio management tool. And you can see all the deposits, the withdrawals. You can see people getting in and out here. It's not like it's a Roach Motel. It goes into a smart contract. And then I'm able to move those funds like copy trading into either ETH or BTC or the DeFi stuff for the DeFi portfolio when the time is right for upside. That's all of this one. Like, dislike, comment, share, subscribe. Happy trading.